Hey everybody, what's going on? It is James here with Crypto Common Sense, and I have your Bitcoin/cryptocurrency update for December the 28th, almost the 29th now. Before we jump into the content, please do me a huge favor. Go ahead and hit the thumbs up button on this video. Don't forget to subscribe to the channel, and don't forget to click the bell icon to get notifications when I release these updates. So first thing I want to mention is if you missed yesterday's video, if you're interested in entrepreneurship at all, I did a video yesterday detailing basically how I've been able to sell millions of dollars in products over the last 10 or so years. And it's free. There's nothing for sale. There's nothing to join. There's no catch. There's no loophole. There's no funny stuff. No marketing tactics. It's just a video that I did to kind of give back on above and beyond the crypto charts and the crypto technical analysis. And so if you are interested in entrepreneurship, highly recommend you check that out. Like I said, it'll be in my videos. I don't remember the title exactly, but it's something about selling millions of dollars of products online. Okay, well, let's talk about crypto. Let's talk about what's going on in the market, and yeah, let's have some fun here. So first chart, I just randomly had this up on the screen, so we'll talk about this first. This is the 3-day chart, of course. We are sitting on this December 27th candle. So this is actually going to close in about 19 hours from now. Right now, this actually looks bearish to me, but it's not closed, so there's not really a lot to read into it. Essentially, what I'm seeing on this, you've got price sitting right around 72.84, and it's just barely tiptoeing above this resistance line on RSI. But here's the reason that this makes me lean bearish. The CME chart actually closed yesterday. Well, Friday, sorry, 2 days ago. I need to get a clean chart up so I can show you. Let's just pull this one up. The CME closed around 72 something. What did it close at? 72.65 is where the CME closed on Friday. Okay. Typically, what we've been seeing recently is we're seeing these pumps on the weekends where they leave open these gaps on the CME, and then it dumps on Sunday night or Monday when the CME opens. So one of the reasons I didn't get super bullish and start taking long positions over this weekend was because of this CME gap. And where the heck did my chart go? So if you think about that logically, if the CME closed at 72.65 and this thing opens up around that same area, it's going to be opening right before the daily close. It's very possible that this 3-day candle is going to close right inside of resistance. And what's that going to give us? It's going to give us a potential, not a confirmed, but a potential double top on RSI, which is what we had right here, and it's what we had right here. And that would feed pretty perfectly into the narrative that this is going to go back down to the bottom of the channel. And if so, it would also feed, fit fairly well into this trend extension. If we take a trend and we measure it from back here, if we say, okay, this is our down move, this is our A or B, here's our C, and then here's our D, 55.16, that would actually make sense. This could move back down to the bottom of this box and move back down to $5,500 at the same time. The other thing to keep in mind is that $5,500 area, it's actually not that far off the trend line. If you draw the trend line like this on the 3-day chart, it actually looks like we're sitting right on it right now. I had not noticed that before I did this video, so that's extremely interesting. Let's see if we can't get that, make it a little thinner, get a better idea of, do we actually have that connected to the right points? We want to make sure if we're on a tail, we need to be on another tail. Yeah, it looks like we're tail to tail, right? So that's possible. If we draw it from close to close, then we get a line that looks like this, okay? You can tell it's drastically different. That's one of the problems with trend lines. Is you're drawing a trend line, whether you're using a tail or a wick or a close, it makes a huge difference. In one way it looks like we're sitting right on it. Another way it looks like it's down here around $6,600. But what's interesting is both ways. For some reason I was thinking that lined up with 5,500. I saw a chart earlier and I thought I saw somebody drawing it that way. I don't know what they were doing. But that's interesting. Maybe this one lines up with 5,500. No, it's way down here around 4,500. I have no idea. Doesn't line up with what I was expecting to happen. So, okay. Trend line doesn't support anything that I was thinking. Maybe this is the one I saw. I don't know. I don't know. But if this moves back down here, I mean, maybe it comes back down to this trend line, maybe, right, over the next week or so. I could see that happening. Come down to that trend line, come down to that 5,500 area, come down to the bottom of this box. I know a lot of people, if that happens, I've seen some of the bigger traders. Actually, one guy that I respect, I haven't seen enough of his tweets to name him by name and say I think this guy's worth following, but I've seen a few things that kind of made me think okay, I think he's probably legitimate. Although I will say that he did basically post some really bearish stuff when this candle closed, basically laughing at people that were longing it, which turned out to be false. But I think that this level is not absurd. People want to play this as support, and they're talking about longing this. I don't think that's crazy. Now, like I said, this particular person does, and I do respect their opinion, so it does give me a little bit of reason for pause. But we've got to all trade our own plan and stuff, and I just don't think that that's a terrible idea to long that. I'm not saying long it like, hey, I'm catching the bottom, I'm going long on a position trade. I'm saying long it on a swing trade. Like, this would be a lower low, and it's very possible that we would get a bounce that would put in a lower high. And those bounces are often 10, 15, 20% bounces, right? This lower high here was 40% bounce. This lower high here was, 15% or so, 20% actually. This lower high right here was about 19.5%. So if we bounce down there, we may bounce from 5,400 all the way back up to 6,500. And that's going to be like a 15 to 20% swing trade if it works out. So I do like that level for a swing long right now. I'll have to see what things look like if it happens and kind of reevaluate. But I like that level. There was support right through here. It's not just dead air, right? This is dead air through here. But this is not dead air. There was some volume traded in this range. So I do think it's very, very possible that we will stop there, okay? Not for good. I'm saying on a swing trade. Stop there, bounce, and then more downside is what I expect. Also, keep in mind that $5,500 to $5,000 area, if we jump over to I've got a weekly chart pulled up. If we jump over to a weekly chart, is this weekly? I have it on daily, but this is my weekly. The 200-week moving average is sitting at 5,065, which is also kind of inside this chop. So again, I don't think that's a terrible place to long this, looking for, at the very least, a bounce. Okay, and again, we've got to wait. When I talk about these prices, these are the things that I'm thinking ahead on, thinking this is going to look good. I want to watch this carefully. It doesn't mean I'm necessarily going to automatically long it. The RSI on the weekly, it is trying to put in this little weak double top, but it's not a double top until it closes below the neckline, which right now is at 41.91. If it closes below that, that would be the type of thing that might give me reason for concern that we're going to go lower than 5,000 or 5,500, because if you look back here, the only time in 2018 that we fell out of that range was when the market capitulated and we actually found our bottom. We dumped from around 6,000, 6,300, 6,400, all the way down to 3,200. It was a 50% dump in about a 5-week period. So if suddenly we do the same thing, not hard to tell what that's going to be. If we're at 7,200 now, that would put us down around 3,600, which would be actually more in line with the larger trend. Excuse me, the smaller trend, not the larger trend. The smaller trend from this local top down here, and then if this ends up being, I don't want fibs, I want extensions. So if we get something like, we could jump back to the 3-day here. So if we go from this high to this low right here, and if this was our pullback right there, right, trend target, $3,578. So I could see that happening. And we haven't talked about this in a long time, but if you're new to the channel, you may not realize there is a CME gap down around that level. Remember this number, 3578. Now watch this. This is the CME chart. Let's turn everything off so it's nice and clean. And let's go back to the beginning of this run up back here in the beginning of the year. Go to a 4-hour chart. There it is right there. You see it? There's a gap between 35.70 and 35.95. Now, I don't put a ton of stock in that gap. That, number one, is a really small gap. Number two, there was this price action right before it, which is a little odd. And if we measure it, it's probably less than 1%. It's like 0.7%. But if you are going strictly by gap, they like to fill. So if we get down to fill a gap at 35.70, here you go, 35.70, and we just said that that trend target would be right around 35.78. You seeing that? That is why I'm keeping an eye on that, because if we dump out, especially if we fall out of this 3-day RSI and the weekly RSI, well, look what happened. Again, with the 3-day RSI box that I drew up 4 or 5 months ago now, what I noticed was it only came out of the bottom one time ever, and that was when it capitulated. So each time this has gotten to the bottom, it's given me a long signal. But yeah, if we fall out of the bottom of that and we fall out of the weekly, I would be looking for 35.78, which would also fill in my desire to go back down and retest this neckline. And then, of course, in this case, it means we would break underneath it. And if that happens, then what we could be looking at is some type of, if this moves down, again, down to this, say, $3,500 area on some type of huge capitulation. We're talking about probably 4 to 8 weeks of price action. Then what I would watch for is a lot of people would probably be longing down here thinking the bottom was in. Very, very possible that that would be the bottom. But the danger there is getting too overconfident, because it could bounce up, come back up, retest this 200-week moving average, which, by the way, Bitcoin has never stayed underneath before. It had 5 closes underneath it in 2015. They're like back to back to back to back to back, right? Just barely closed underneath it, like 4 or 5 weeks in a row, and then came back above it. And I'm talking very, very close to the line. We've never had something where it came down this far below it. And I think it could be the first time in history where it comes down like this, comes up for a bearish retest, and gets rejected. And that's the scenario that could take Bitcoin down to, retest those 2013 highs down around $1,000 or so. I would look for longs down here. Potentially, again, you have to see what's going on at that time. But I would certainly be very eager to look for a long position in this area. And if it did bounce up, what I would be watching for is to see how it acted up here. I probably would not look to take profits right here. I'd probably look to stay in the position and maybe set a stop loss right back down at this level, so that if it came up here and then try to make a lower low, that it would kick me out of my trade for break even, versus getting greedy, selling here, and then having it explode up through this thing and run off without me. Okay. So I would be bullish, or at least try to lean bullish at that point. Because again, you've got to remember that other markets have went through similar phases, like the NASDAQ, where it had a big bubble, it had a big false rally, and then it came down and retested its bottom, and then it just took off like a rocket. And in fact, the 2015 cycle, it did two things, and we don't know which thing is more likely to happen. It did the one deal where it had this false bottom, came up for a rally, it was a false rally, and then came in and put it in a lower low. Like it was like 400 over here, and then it dropped down to like 150. But you also have to remember that in 2015, once it did put in a bottom, about 8 months later, it came down and retested that bottom and then moved up. In fact, let me just show you, so that if you've never seen this, you'll know what I'm talking about. So if we go back in time and we go back to 2015, right, this is the... right here's the fibs, and we had the false bottom and it came down. So this is possible that this is what we're going to do. Like, we're going to go up this, we're on our way down, and we're going to retest our old bottom, which in this case will be around 1177. But it's also possible that this is what we're doing right here, where we're getting ready to come down and retest our bottom down around 3,000 to 3,500, and then just move up, right? And if you look at this price action right here in August of 2015 was roughly... I can't remember when the halving was. I think it was in July of that year, if I remember right. I want to say it was July. Maybe it was August. But anyway, it was... maybe it was June. I think it was June, because it dumped right after the halving. Regardless, it was like 6 to 8 months, 9 months maybe before the halving this happened. So we're a little closer to the halving this time, but this is still possible. It's possible that we're just going to retest the bottom and then move up off of it. So, if price gets down to $3,500, I'm not going to be like overly bearish. I definitely would not be looking to short it, right? Even if I didn't take a long, I definitely wouldn't try to short it at that level. The risk reward just would not be there for me personally. So that's kind of what I'm looking at on the bigger picture, right? And on these smaller time frames, I do want to see what happens. I want to see if it's going to fall to the bottom of this box on the 3-day and the weekly. And I want to see, if we capitulate here. If we look like we're going to find support, then that 5,500 area, will look pretty interesting to me, especially because it's right above the 200-week moving average, which again has acted historically as support all through Bitcoin's history. The other thing to keep in mind is we do have this potential ascending triangle. There's a few things about this triangle that's a little bit wonky, so let me talk about that. When you put it on a line chart, it's like, okay, yeah, that looks like an ascending triangle or a potential double top. But when you really put it on a candle chart, it's pretty wonky, right? I mean, it's just kind of like a bunch of candles that's really smushed together. There's not a very big range. So I'm a little bit skeptical of that. And if we put it on a daily chart, it's just a mess, right? There is no ascending triangle on this daily chart. What this daily chart actually had was this double top that came down, fell through it, moved down like you would expect, came up here, retested the top of the range, and now it's just kind of consolidating sideways. Essentially on the daily, what you have is this, right? You've got this range that Bitcoin is just trading sideways in with a few false breaks above and below it to kind of, catch bears and bulls off sides. So I would watch this range, because if we break north of it, that could be a sign that it's going higher. That's up around $7,500 or so. And if it breaks south of it, down under $7,000, I would expect a bigger move to the downside. We also have to keep in mind that on the CME chart, the 200-day moving average is up around $8,300 or so. So we could get that surprise pump to really punish late bears. It's also entirely likely that what we actually see is something that looks like this, where we do go down to around 5,500, and that then we get a pump up to the 61.8 fib. Now here's what would be interesting about that. I really should have drawn this on the CME so this makes more sense. So if we go to the CME chart, and let's just say hypothetically, and we don't have any idea, right? We're just doing the best we can with the information available. But hypothetically, let's say that this thing moves down to $5,500, okay, from up here. So down around this area. If it does that, then the Fibonacci level on the CME chart would be up around 8,000. And if it does it on the other chart, look at this, if it goes from 10,540 down to 5,500, that 61.8 is going to be up around 8,260 or 8,200, a little over 8,200 would be the 61.8 fib, which if you guys watch my channel, I love to short that thing. That is my thing that I love to short if it backs up with a few other factors. Well, here's the thing, $8,200. If we slap a 200-day moving average on there, where's the 200-day moving average at on the CME? 83.66. So it's not exact, but if we go in here and we add that golden pocket, which is the 61.8 through the 65 level, not 65, but 0.65. Look at that. That golden pocket's between like 8,000 and 12. Actually, wrong chart, sorry. Need to add it over here. Come on. Gotta make my life complicated here. 0.65. So that golden pocket is suddenly an area between 8,200 and 83.94, and our CME 200-day moving average 83.66. So how cliche would that be for this to do something like this? Dump down all the way down to around 5,500, and then have this huge washout pump, not straight back up, of course it would chop and all that kind of stuff, but then have this huge pump right back up to this area to come nail that 200-day moving average before more downside, right? Very, very plausible scenario that I'm going to be watching for. And again, if that happens, it's not that I'm going to say the bottom is in and I'm going long for a position trade, but yeah, I would love to swing trade that, right? From 5,500 all the way up to 8,300. I mean, do you realize what type of trade that would be? Look at this. If you go from 5,500 all the way up to 8,300, that's a 52% trade. That is a massive trade. It's not that likely to happen, right? It's plausible, but it's not super likely. 50% in the beginning of a bear market, you can kind of see that because there's still a lot of excitement, still people that are complacent. Toward the end of a bear market, a move like that's going to be a whole lot less likely, right? Usually your bounces are going to be a whole lot weaker. So, but I'm not going to rule it out, right? There were some big bounces 7 months into this bear market in 2018. You can see here that this bounce here, again, this was right around 7 months in, 49 to 50% bounce, right? I remember this bounce specifically because I nearly went like overboard and bought a bunch of coins because I got nervous that the bear market was over and I was going to miss out. Thankfully, I didn't because I'd already put enough in back here that I was already taking a beating on. But yeah, I almost doubled down at that point because this actually broke out of some trend lines and blah, blah, blah. It looked bullish, right? That 50% pump bullish. Because again, if we do measure this from a date, right? From the beginning there to that pump happened roughly 143 bars into that bear market. And right now we're roughly 129 bars in to this bear market, right? It's weird that says 129 bars and then 184 days when this is a 1 day chart. That doesn't make any sense. That doesn't make any sense at all. What in the hell? Oh, because it's the CME. Duh. They close. Okay. So you can see here that if we have 143 bars, that would give us a date of around January 16th. That we might actually get a pump that's very similar to this pump back here in 2018. So, I'm interested in those levels for sure. So let's talk about the smaller time frames. Let's go over to a daily chart, I suppose. Okay, so here's our daily chart. Guys, this level is just the same level I've been watching. I've been watching it now for, I guess, over a month. It's $7,426 on this particular chart. It was an important line of support back here. It was an important line of support here. It became resistance through here. So, we need to break and close above that to get really bullish, okay? And what people are saying right now, or what some people are trying to say, is they're trying to say that this is an upside down head and shoulders, an inverse head and shoulders. Is that an inverse head and shoulders? Yeah, sure, I could see that, right? I don't think so. I don't think that's what it is, but I could definitely say, yeah, I get that. I can understand why somebody would say that. If that thing were to break through that neckline up here around $7,500 or so, well, then we would have a target of, depending on how you measure it, up around $8,400. Again, I find a lot of interest in the fact that that's up around the 200-day moving average on the CME, so I wouldn't write that off altogether. However, the other possibility is this is actually an upside down Adam and Eve, right? Which is actually a form of a double top essentially, which would be bearish in nature. So I'd want to see that break down through this neckline around 6,600 before I said that that's what I think that is. But very, very possible, right? Either one right now are a possibility. They're both unconfirmed, so it's not something that we can trade on. If we look at the RSI down here and we start drawing a trend line, we have this really, really beautiful trend line. I actually missed this in yesterday's video somehow. But when you're moving up through here, this was support. It fell underneath it. Bam, here's your bearish retest. That would have been a reason to possibly short Bitcoin at $7,700. Came up for another retest. Again, on a wick, this would have been touching this. It closed underneath it. Another reason to go short there. Bam, down here you have bullish divergence where you had this thing putting in a higher low and this thing putting in a lower low. So there's a reason to go long, or at least close a short if you were short. If you don't want to fight the trend, then sometimes you don't want to go long. But if you're in a short, that's a reason to get the hell out of it and take profits. We've now pumped back up, and if you notice, the first thing we did was we just came up and got rejected on this beautiful bearish retest right here at 7,513. So a person could have shorted that and made a really nice, $400 or $500 trade per Bitcoin, which is, 5-6%. It's a really good trade. Now, what I was almost wondering is if we're going to come up and test it again. It does not look like it's going to have the oomph to do that. Okay, and this almost looks like it's trying to put on its own little head and shoulders down in the RSI, which is bearish. You can find those same patterns in RSI that you find in price without volume confirmation, of course. Like right back here, we had a double top form, and when it broke this neckline, you can see that that happened right around here. Broke the neckline, and then from 7,000 down to bam 6,400. Okay, so yeah, the daily RSI looks bearish to me. The hourly chart also looked bearish. I actually shared this in my group earlier on Discord, saying, hey, this thing just had a bearish retest and it failed. Keep that in mind. So if we draw this from this high right here on RSI, and we just draw this nice little downward sloping line, right, and then pull it back, look what we get. We get a downward trend line, and line that up there right here is where it happened at. Damn, I guess it was 2 o'clock this afternoon. I can't believe it's been that long ago. It just seemed like a few hours ago. But it came up, and on this wick, this was actually just barely peaking above this line, right? It was interesting to see where it closed at, closed right underneath it. And again, that would have been a reason to go short if I wasn't already short. So $7,327 could have been a great entry, and somebody could have made, a little over 0.5% if they wanted to do a quick scalp. Or if they were still sitting in that trade, they'd be up right now around ballpark 0.6%. So not something to write home about, but if this thing does dump, that could end up being a really good entry. And again, that's based on the hourly chart. So kind of what I'm seeing there. If we look, we had some ascending trend line stuff going on back here. So we had something like this, broke underneath it. So you can redraw that. If you're drawing it from the tails, you had something like this, broke underneath it, fine. Then you had something like this, broke underneath it. But overall, right, it's still above that line, so I would watch it. It's not something that I'm super interested in, but I would watch it. I think it's more important to draw it like this. And I think that you just, can very quickly and very easily see, like, holy shit, it's almost an exact, bottom. So you end up with this range, right? This big range through here. So even if this doesn't dump out, it's very likely that it might go down and at least retest the bottom of this range. So again, I'm bearish right now, right? That's kind of what I'm seeing on Bitcoin. On the alts, I saw people getting bullish on some alts. I saw this hilarious article yesterday. They had all kinds of misprints. It was on, I think it was investing.com maybe, or one of those different investing websites. And they were telling people that Litecoin had a 100% gain, and that it was sitting at $420,000 or something. And obviously, I guess the article was an auto-generated article, and so the punctuation was in the wrong place. But people were getting excited about Litecoin, saying it looked like the bottom was in and everything. Guys, I don't agree with that. Let me show you what's going on with Litecoin real quick, and some of the other alts are going to look similar to this. Let's get rid of MACD. We don't need it for this video. You essentially had on the 3-day chart. By the way, I know a lot of people don't use 3-day charts. I'm just going to give you some advice. I've never seen anybody teach 3-day charts. I've never seen anybody talk about 3-day charts. I'm sure people do, but I just haven't seen it. I find these to be the most accurate chart in crypto. You guys probably already know that. I've talked about it in the past. I have that 3-day chart. It's basically been like a crystal ball. I find these to be the perfect chart for crypto. They're give less false signals than daily charts, but they're not so slow that you miss the moves like on a weekly chart. So 3-day charts, freaking awesome. All right, so this thing actually got down here when it closed over here. It basically put in tweezer bottoms. That's a very bullish sign. It's a reversal signal. At the same time, it had just come off of oversold territory on RSI. Now, normally on RSI, that doesn't mean a lot of anything, right? Who cares? Oversold RSI. That's anybody that trades on RSI alone is probably a brand new trader. Except in the case of 3-day, it's actually pretty good, right? If you go back and look at the history of it on most coins, you'll find out that it's usually a really good place to look for a long setup. I'm not saying you automatically long the coin. I'm saying you look for a long setup. Look back here. It came down and touched this sucker, and it bounced up. Now you're thinking, that's not a very big bounce. Yeah, it was pretty big. 30%. Came down over here, fell into the oversold, put in a little bottom there, bounced 40%, right? Over here was the capitulation. So when it got down here, that was a pretty good sign that there's going to be some type of bounce. Doesn't mean it's reversing, just means it's going to be some type of bounce. And now if you look at this, essentially what Litecoin has done so far is it's just putting in a lower high, which is very standard stuff in a bear market. You go down, you get oversold, you have a relief bounce, a dead cat bounce, you put in a lower high, and then you turn around and go down some more. Okay, it doesn't mean that the bottom is not in. No, definitely not. It could be in. I love the fact that Litecoin has come down and basically retested its breakout, which is what I want to see out of Bitcoin, right? So if I was going to get bullish on Litecoin, this would have been the area that I would have done it. I did have bids sitting at $34. They did not fill. I canceled them after it started to go back up because, again, if it starts to move back down, this is probably going to be, go down and make a new lower low, which at this point could be down, around the $30 area. I think it's more likely that it goes all the way down If it moves down more, I think it's more likely it's going to go down to the lower 20s. If we draw a trend extension on this thing, it's very difficult to find a good pullback to use, right? None of this looks super great. But if I try to find this one here and I draw it like this, $33 is the full extension of that, right? And then the 618 is down around $12. I don't care about the $12. I like using the ones. So that's a possibility if we draw a trend like that. If we're going to draw it on a bigger trend, something like this, then our one was at $37 and we hit it and we have pivoted right off of it, which could be bullish, right? Again, it could be that the bottom is in, but I don't think so. I don't think the bottom is in, and the reason that I don't think the bottom is in is because I think if Bitcoin continues to have more downside, here's another good one. If you draw from here to here to here, 35.27 was the bottom, almost perfect touch there. But really, if Bitcoin dumps and capitulates, it would be very unusual for the altcoins to not capitulate with it, okay? So that's kind of what I would have to say about alts is, they usually move with Bitcoin. What it really did yesterday, and I noticed this when people were getting super bullish, was I started looking at it to see if I did want to take a long position, and I didn't. I looked at it right when it was coming up and testing this 200 moving average on the 4-hour chart, and this looks like a bearish retest. You've moved down under it, you've come up to retest it, very likely that it's going to have more downside from there, okay? So if we look at, a lot of the alts are going to look the same way. I don't want to go through a bunch of alts because the video is already very long. And, I could sit here for an hour and do the videos. I hate editing the videos. I have to listen to them like 5 times to get all the mistakes out of them. And it ends up taking me hours, and listening to myself talk is not exactly my idea of a great time. EOS looks a little different on the 4-hour. It actually looks like it broke above its 4-hour, so it could come down for a bullish retest, which will be interesting because then maybe it gets a bounce off of that. If we look at its daily chart, it actually did have some... it had some bullish divergence back here. So you had price making a significantly lower low. You had the daily RSI making a slightly higher RSI. Would have been a little bit sketchy to take that trade based on that small of a divergence. But, if you can find some other factors to back it up, sure. This could have been a really great trade. From that close to now, it's up around almost 20%. Pretty killer trade, right? Its 200-day moving average is way up here around $3.80. So I don't expect that it's going to pump up to that anytime soon, but it's possible that, it makes some moves. This looks bearish still, and if we draw, this looks like a lower low. It's very cliche stuff so far. If we draw a trend on this, there's no real pullback to use there. We'd have to use something like this. I don't love that, but that's about the best I have in the smaller time frames. It would give us a target down around $1.84, and really, this is the best one. It had a target down around $4.91, and its first extension was at $3.22, so that one's really played out. The next one, I think this is, reaching a bit, but if you want to use this, you could see that it actually did act as support through here, support through here, support here, resistance here, support through here / resistance. That's got a target down around 43 cents. I know that seems absurd right now. I don't think that's absurd. I think if Bitcoin makes a new low, again, we're talking like $1,000 price point, that you'll see a lot of alts make new lows as well, below their old lows in 2018. And if you look, it's a pretty much perfect line back here. See this? Lines up really nicely with this candle tail, and lines up really nicely just underneath these support levels. These support levels were down around 50 cents. But I could see it going back down to that level, right? I could definitely see that. Wouldn't love it. I wouldn't love any alts going to these new lows, but, it is what it is. That's the way markets work. When you have a bubble like this, a lot of companies, they go away, they never come back, and then a few companies that are able to come back from the ashes end up becoming the all-stars. That's exactly what happened with Amazon. Amazon got down to a couple dollars a share after it collapsed after the dot-com bubble, and now look at it. It's almost, last I looked, for $1,800 a share. So, it was actually an amazing investment opportunity, and if these alts get down, the alts that survive, they could be an amazing investment opportunity as well. You could invest in these things, and the potential is there. I'm not saying it will happen. There's a lot of risk involved, but the potential is there to invest in some of these alts and definitely see 20, 30, 40x returns over the next several years. So pretty crazy stuff, okay? I feel like I did a pretty good job covering a couple of the alts there, and certainly Bitcoin. I have not looked at the total market cap, so I'm going to look at that real quick, and then we'll wrap up because the video is nearly 40 minutes long right now. So let's just look. Okay, well, there's our triangle. I'm pretty sure we already talked about that breaking south of that. So we'll get rid of that. And this is a 3-day chart. Again, it came down, didn't quite reach oversold, but right at 30.6. So this bounce isn't really that big of a shocker. If we're drawing a trend from the top here and using this as our lines, it looks like we're finding support right on the 61.8 Fibonacci level, and our true extension all the way down to 100% move would be a new low, versus 2018. And of course, that would bleed out over 50% of the alts. Would bleed out about $30 billion worth of market cap, and be about a 51% drop, which again, when we start talking about capitulation and 2018 being our, kind of our litmus test, that's what the capitulation was. It was about a 50% drop. So if we see a 50% drop, there's your narrative, there's your plausible scenario with how alts might get down to that level. Okay, if we draw this and try to draw a smaller trend, maybe taking it from like right here to here to here, then you can see that we actually hit our target of 54 billion, and that we're literally just sitting right on top of it. It's acting as support, and we've bounced back up. That being said, if I put this on a line chart, which I like to do because it makes it real easy to see the higher highs and lower highs and all that kind of stuff, this just looks like a very typical lower low, and this looks like it's trying to put in a lower high before more downside. Okay, so I'm going to do one more thing. I hadn't planned on this, but I had this guy that was following me on Twitter, and somehow he had snuck by my radar. I thought he seemed like a pretty legit trader, and then today I saw him telling people to basically FOMO in because you just didn't know how low it was going to go, and it was better to FOMO in now versus waiting and missing the bottom. Some of the worst advice I've ever seen, but I'm not here to call him out. What I wanted to show you was two different charts. One of the things that you need to understand about markets, and this is whether you're investing or trading, you really need to understand how to tell what trends you're in. And this is not something that you should take years to learn. This is a very basic concept. If you're looking at a chart, this is a monthly chart of Bitcoin. We had a high, low, lower high, lower low, lower high, lower low, lower high, lower low. That is a downtrend, right? That's very typical market structure for a downtrend. Then we had a higher high and a higher low, so I could understand why people would be bullish back here. Now, I wasn't, because this hit the 61.8, and there were some other reasons I was bearish back here already. But at least when people were bullish, I could understand why they were bullish, because this was bullish structure on a monthly level, right? On the smaller levels, it had already changed, but on monthly, I could say, okay, well, there's still monthly, reasons to be bullish. But as soon as it put in this lower high, that's really when you had to turn the bull bias off. And as soon as it put in this lower low, that's when you had to say, okay, this is a downtrend. This is no longer up for debate. You can't debate this. This is a downtrend on the monthly level. Okay, now some people are going to say, oh no, because it's way up from over here. Yeah, so stock market has always been way up. Every time it's had a crash, it's always been way up compared to where it was 50 years ago, right? When gold crashed from $1,000 down to $200, it was still way up from where it was 100 years ago, right? We're talking about the current trend, and the current trend is down. If you look at the weekly chart, this becomes even more clear. This is a weekly chart here. You've got your high was back in actually August, right? Because this goes off the closes, so it's not going off of 13,800. It's going off the closes. High, low. Okay, so again, through here you could at least make the argument that there's still some bull cases to be said. I was bearish, but the trend itself hadn't reversed yet. You got a lower high, a lower low, a lower high, a lower low, and now we don't know what we're doing. Right now we're moving sideways. This is not lower high, lower low, lower high, lower low, right? This is just sideways movement, just like this through here, just like this through here, just like this through here. Not this and this, but this through here, right back here. We don't know what this is doing. This could pump up and could do a lot of things, but these are the two scenarios that I think are most likely. Either this thing pumps up to 8,000, 8,500, somewhere in that ballpark, puts in a lower high, and then starts to move down, or this thing completely falls down to around this $5,500 level, puts in a lower low, and this ends up being the lower high, right? In which case, then you'd expect a pump to get another lower high. This is the reason people say markets don't move in straight lines. This is what they do. They chop, right? If it moved in a straight line, that'd be way too easy. Nobody would be buying in a straight line down, and everybody would be trying to sell in a straight line down. You have, the market doesn't move like that, because when it starts to move down, people get excited and they think they're getting a good deal and they buy it. And then when it starts to move back up, people get excited and they start taking profits and they sell it. So you get chop. Okay? Very simple stuff. One chart that I've scrolled past several times in the video, so I'm just going to go ahead and talk about it. I do not think this is what's happening, but what I said on Twitter, and I put this on Facebook as well, is if somebody put a gun to my head and said, give us a bullish scenario, this is one bullish scenario that I could at least say is based in reality. I do think it's plausible, even if I don't agree with it. I'm playing devil's advocate to my own bearish bias. And I do think that we're in an echo bubble. I've drawn several different echo bubble charts showing lows down around 4,100 and so on and so forth. But if we were to get bullish and if this 200-week moving average was to hold, I think this is probably what it would look like, right? We would end up finding out that this was actually denial back here when we pumped up to 10.5, that this move down from 10.5 to 6,400 was actually our panic/capitulation. That is a big move down, right? If you think about it, from 10.5 to 6,400, that's over 40% that Bitcoin dropped, or right at 40%. Huge move down. Okay, so that could have been the panic, and then down through here, I haven't really seen any anger is the thing. This is why I don't think this is what's happening. But technically, if you wanted to look back here at the chart and just go by the pattern itself, I could say, okay, yeah, I see this argument. You've got this double top right here, a little bit lower low, just like double top, lower low. Then you got this little pump with a little chop, and then boom, you move down and consolidate down. And if that happened, then we could move over and consolidate down, come right down to that $5,300 to $5,500 area, hit that trend target, and also hit this 200-week moving average, which has acted as support in previous bear markets. And maybe that is the bottom. Maybe that's where people are depressed and they get bummed out, and maybe we start to move up from there. That I can see that happening in March or April, a few months before the halving, and then the halving, maybe it does act as a catalyst to get people excited again. Maybe it does pump off that 200 moving average. The one thing you have to keep in mind is a lot of people are watching that 200-week moving average, and if that thing does hold, there probably will be some serious bullish activity happening off of it. We just don't know how high it will go. It could be that this is a lower low, and then it, like I said earlier, it pumps all the way back up here, gets a huge 30 to 50% pump, and then just keeps moving down. Okay. That being said, I think probably at that point, if it did pump 50%, that would probably break a lot of the bear structure, and that may start looking like a bull structure, and it may be time to say that the bottom is in. So we'll just have to wait and see what happens with that. All right. With all that being said, guys, please remember that I am literally some guy sitting in his bare bedroom, so nothing in this video is financial advice, nothing in this video is trade advice. You should always do your own due diligence and seek out professional investment advice before making any type of investment in cryptocurrency. If you enjoyed the video, please be sure and give it a thumbs up and subscribe to the channel. And of course, don't forget, you can check the description for links where you can follow me on TradingView, Twitter, you can join my free Facebook group, and where you can join my paid trading program if you'd like to learn how to trade. Again, guys, I got this. If you haven't seen my videos lately, I ended up finding out that I have some degenerative disc disease. I've got arthritis in my spine, my C3 through my C6 vertebrae, and I have a bulging disc in my C6. So I have to limit how much time I'm at my desk for the next few weeks until I can see the neurosurgeon and get some type of physical therapy worked out and kind of get a treatment plan. So haven't been able to finish the trading course yet. I got a few videos left to do, and when that is all done, I promise you I'll do a video and I'll walk you through the members area and I'll show you exactly what's inside of there. So if you're worried that, oh God, I'm going to miss out, I got to buy this now, no pressure, right? Trust me, if I do a sale on it and there's some kind of limited time offer, I will let you know about it in advance. There's no rush, other than obviously there's a lot in there now that you can probably benefit from, especially if you're new. But I will get the videos done hopefully over the next week or two, and then I will do a complete walkthrough. All right, this is James with Crypto Common Sense. Please trade safe.